Welcome back to the show, everybody. Check out these headlines we got for you today. The BIS, we got $3 billion worth of Bitcoin. And we got this, Citibank on crypto liquidity crisis. Is it over? We'll get into that. And are we running out of retail tacos? Hello, XRP retail holders. Jed in the Treasury, MIT, Gary Gensler of all people gives us an important reminder from those days. We got James Wallis, the head of central bank engagement for central bank digital currencies from Ripple, and so much more, including XRP technical analysis. Somebody wrote that beautiful intro.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow me on TikTok at the top of the screen, YouTube and Twitter and Facebook for exclusive content. Give us a like and follow in those social platforms. Take a look at this. $1.080 trillion market cap for cryptocurrency. We're way off from the 3 trillion plus we've been at, but that's okay because we're going to flush this market out. This is a watershed moment. We are on the precipice, I believe, of getting the kind of regulation that legitimizes this asset class. And as much as I have a problem with a lot of the way it's being done, I can tell you I am excited about it getting done because I do know this. Right now, it says that they're showing 13,373 coins listed on CoinGecko, and I can tell you that there's not 13,373 use cases. That much I can guarantee you. So let's take a look at it. It's June 24th, 2022. Good morning, everybody. Bitcoin 22,500 plus. Ethereum right now 1,500 plus, still up 16.5% on the 7-day. And at the number 7 spot, it's Cardano as XRP slips to the number 8 spot. Cardano is at 52 cents this morning, up 14.7 on the 7-day, a little more than half of that on the 24-hour. We can see XRP right now is 36 cents. Let's take a look at the range of price very quickly. 35 cents to 37 cents. We're going to get into some technical analysis on the short side before we get moving here. But take a look at this. I love to diversify my portfolio. One of the ways that I do that is Masterworks. I love working with them, and I love being a customer even more. Look, I love gold. I love crypto. I love art. I love private equity. I love all of these things. I mean, this to me is, I get excited because I am starting to build out a portfolio I can really feel like I'm proud of. And for the first time in history, you can invest in some of the baddest art in the world. Invest in multi-million-dollar paintings. I own parts commoditized shares in Andy Warhol, Christopher Wool, John Michel Basquiat. I mean, just remarkable artists that I never thought in my life I'd be able to take and participate in ownership of these paintings. And I tell you, if you had invested $45,000 in the last round of paintings that got sold, you'd have made $60,000. 450,000 people can't be wrong, ladies and gentlemen. Make sure you check out the link underneath the video. Now let's start right here this morning. It is none other than Augustine Carson's. I want to talk about this because, first of all, you've heard this clip. I've played this clip before, but it's very short. Listen to this clip, and I want to talk about the tweet.
Our analysis on CBDC, in particular for the use of general use, we tend to establish the equivalence with cash, and there is a huge difference there. For example, in cash, we don't know, for example, who's using a $100 bill today. We don't know who is using a 1,000 peso bill today. A key difference with the CBDC is that central bank will have absolute control on the rules and regulations that will determine the use of that expression of central bank liability.
And that's really it right there. He's telling you that we're doing this central bank digital currency business so we can see what you're doing with your money. I mean, he's not even playing around. That's exactly what's being said there. And that is exactly right. Now, I don't like it. The libertarian in me does not like it one bit. But I'm also 51 years old, and I realize that, I believe it was Bernard Bernanke said at a Ripple Swell conference that the governments and banks, they would all roll out the tanks basically before they would let a a coin like Bitcoin or some other token become bigger than the government dollars of the world. And I've come to understand that truth as well. Carl B. Menger, not to point fingers here or to really, bring you out of the crowd, but it is your tweet, says cash will be gone in a couple of years, replaced with central bank digital currencies, giving central banks a surveillance tool for total control, which is scary. And I agree. I don't like it. The final boss, Augustin Carson's at the Bank of International Settlements. He says here, Bitcoin is hope because it can't be controlled by those clowns. Carl, I don't know what alternate universe you're living in, but Bitcoin is run by proof of work. And if you haven't been paying attention, let me help you get up to speed. They are clearly moving to outlaw or ban proof of work. And if they don't, then they're going to tax it so heavily, Carl, that they are not going to want, people are not going to want to use it because the taxes are so burdensome. Hello, carbon tax. Now, I get people that beat me up all the time. Why do you, and matter of fact, I think it's even in this right here. I'll say it again for the people in the back. Proof of work is not necessary to run a blockchain. Full stop. You can argue using renewable energy for Bitcoin, but why? If you're going to create renewable energy, why use it for something outdated? The truth of the matter is, to everybody out here, whether it's Carl or anyone else, and I appreciate you, Carl, honestly, even though I know you feel like I'm probably taking a shot at you, I'm not. You represent a lot of the mindset of the people that have made a lot of money on Bitcoin, and they don't want to see it any differently now that they've made a lot of money on it. Vila here is the same way. He says, I don't know why you guys hate on Bitcoin so much. If Bitcoin went away, all the other projects would tank so hard, there would be nothing left. Yeah, maybe in the short term, Vila, but the truth is that you're seeing this space as if it'll never change, Vila. The truth is there are real protocols out here that don't operate on proof of work because it's not necessary to mine to operate these networks. And if you think that it'll always be this way, I think you really need to sit down and think about all of this again. I really, really do. And, to come to that point, look at this. Not only do I expect to see some kind of carbon tax or a push, I'm encouraging Bitcoin miners to move to something else, whatever it is, proof of stake or whatever you come up with, or some new version or whatever it is. Get it all mined so it's over with. However, use quantum computing, get it done. I don't know. But here we see a reminder from XRP Kendra, who says $3 billion worth of Bitcoin, which is about 150,000 Bitcoin that were from Mt. Gox when that went down, were held from the Mt. Gox exchange 7 years ago, will finally be released to investors near the end of August. Wah, 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 wah. I don't know about you, but I'm seeing, do you think that any of those investors that have been waiting that long to get a hold of their 150,000 Bitcoin aren't going to sell any? What would it look like when $3 billion worth of Bitcoin starts to hit the market in a fire sale to take some profits after they've waited 7 years? Multiple evidence indicates that the liquidity crisis in the broader cryptocurrency markets may have seen the worst. This is the conclusion suggested by Citibank in the latest study. First of all, if you haven't given Michael Branch a follow, he's Michael Val 5 links. His page was hacked. Please go follow him. You're not getting half of what you need if you're not following Michael on Twitter. The other part of this is I say, whoa, Citibank, not so fast. We haven't seen an exchange sued yet, and it may just be Coinbase. So I'd be very careful about this liquidity crisis because you could see problems created in that situation. And I'll tell you what else. The bigger problem is USD Tether, ladies and gentlemen. Oh, yeah, I keep bringing it up because it's a very real thing. The CTO for Tether said, we don't use commercial paper for our reserves. We don't use treasuries for our reserves. And we don't have an outside firm accounting the reserves for us. We do it inside because we got a good group inside doing it. He's explained to you, the CTO of Tether, exactly why they're probably going to get their butt pulled in front of somebody. And look, on the minimal side of this, they're going to get reprimanded, fined, and all of these things and forced to comply in all the ways that they're currently not. Okay, dip in the market, then we're back to business. On the deeper side of this, and the other side of this, is that the U.S. government looks to make a poster child out of anybody who thought it was a good idea to start a private company and advertise publicly about a digital counterfeit U.S. dollar. I'll let you decide what happens. This here, the big skinny, a digital asset investor right here. The Block Biz says uphold down for 8 million from 8 million XRP in their wallet Friday to only 3 million left today. I asked the question, are we running out of retail tacos? This is getting interesting to watch. You can see the balance right here. You know, this is based on the theory that really came up in the question to me from Big Skinny, and then I dug down the rabbit hole and proved since 2019, Ripple has not sold, and you can confirm it. I've showed it here on the channel many times since the conversation has begun. Since Q4 of 2019, Ripple has not sold XRP to retail exchanges that are non-participating ODL partners. Period. Full stop. So, since 2019, Ripple has not supplied retail exchanges with XRP. So, the question is, now that Jed McCaleb's 9 billion XRP are gone, where do the retail exchanges get XRP from? And as JV the Great here is another person you need to be following. Question, so what happens when all of the XRP liquidity dries up on these exchanges? It's low now, but the value of XRP is low. Will financial institutions just source all of the XRP from Ripple, whose escrow is not in circulation yet? It's a great question from JV. And this is what we're talking about. It's an extension of that post, right? But I wanted to say and add to this. JV, I think the next step is to watch and see if Ripple partners are incentivized to replenish non-ODL participating retail exchanges. If not, we know it is truly time to pivot away from retail, as Dilip Rao mentioned in 2018. And let me bring him into the picture from 2018 right here. 1 second.
Many people are using cryptos just to buy and sell and make quick gains out of it. Does it hurt the growth of cryptocurrencies, that usage for a quick buck?
He's talking about retail.
So I mean, it's kind of chicken and egg. You have to create a marketplace. And right now we have about 150, 200 exchanges around the world that trade in XRP. A lot of it, as you say, is very shallow trading by individuals, and that is not the use case that we are pursuing. What we are pursuing is the use of XRP as a financial asset by sophisticated institutions as a bridging mechanism. So does this hurt or harm? Well, it creates a lot of noise, and we certainly don't want that much noise, but we're waiting. And for example, this last quarter, the bulk of XRP sales were to institutional investors. And as this transitions away from retail to institutions, we'll start to use it for wholesale, financial usage. That's when the turning point will come.
So the question now is to watch and see if these Ripple partners or Ripple themselves are incentivized to replenish non-ODL participating retail exchanges. If not, then we truly know it is time to pivot away from retail, and that turning point has come that Dilip Rao mentioned in 2018. Everything in phases. I'm all eyes. Then there's this. Shout out to Linda P. Jones. If you haven't watched the video that we did together, that conversation, whoa, it's straight fire. Shout out to you, Linda, for being on the show and making time as always. Ashley Prosper says here, if Jed is selling XRP to the Treasury, which we have speculated on that too, it would explain why the SEC sued Ripple, why they let Jed sell his XRP, why Rosie Rios joined Ripple, why Congress hasn't called for an investigation, why the IG or ethics office won't investigate, and why Jed hasn't been mentioned in the case. All really great points. You know, when it comes to Rosie Rios, Michael Esbar, Susan Friedman, Craig Phillips, all from the Treasury that had spent time or are currently still at Ripple. I have to say, I've always referred to that as a transition team. right? That looks like a transition team to me, because they're bringing the people on where the ultimate goal ends. That's what I see. And I see the same exact thing that Michael S. Barr is obviously now the VP of the Board of Governors and going to play a key critical role in stablecoin regulation in that particular chair and position that he's in. Again, that looks like a transitional position to me, because he has such knowledge that makes him a person of very, very special knowledge that can play a key important role in integrating the use of something like the XRP ledger and XRP for payments. We'll see how it unfolds. This, of all things, is an excellent reminder from somebody you never thought would give you the reminder. It's Gary Gensler. Shout out to Mr. Clean for this one. Take a listen here.
Yeah, but I do think the enforcement actions will pick up, and you'll see more, and also private litigation, which is also what you have in the XRP case, but you have it in other cases as well. I think regulators and courts will bring greater clarity to the security definition. At some point in time, things like XRP will decide it. It might be decided it's not a security, but I think that's going to roll out over the next 18 to 36 months. It's not like the next 3 weeks or 6 weeks, but I think that even the Securities and Exchange Commission will speak more definitively than Bill Hinman's speech he gave in, was it June? Yeah, June. That was one.
Yeah, it was in June. And, again, this is the MIT days from Gary Gensler, when the case had really just come on at that point. And I think he understood and knew exactly what was going to happen in that 18 to 36 month window. We're in that window. And that's exciting. I think he also understood that he would be taking and have a strong chance to take the chair at the SEC at that time as well. Look right here. This is James Wallis. And as Rosie Rios says, the train has left the station. A reminder that James Wallis is the head of central bank engagement for central bank digital currencies, ladies and gentlemen. Take a quick listen to this. The train has left the station.
I think the big question, I think central bank digital money will definitely happen. I mean, it's already happening. Congratulations to Nigeria and a few other countries. We're working on projects that are pilots prior to going live, so not proof of concepts. I think proof of concepts should be a thing of the past now. And the big question really is what happens in the middle. The commercial bank sector, and whether that will be ultimately stable coins or some other form of digital money.
And to that point, I believe we get that clarity because Michael S. Barr has that very specialized knowledge that not many other people have to be able to craft the kind of regulation recommends, to be able to get us that clarity we need, to be able to understand how to move forward. Not many people have the special skill set that Michael S. Barr now does.
Digitization is happening. You can't turn back the clock. You can't, change the future of the world. It's going to happen at some point, and there definitely will be coexistence based on rules, based on use cases.
There you have it, based on rules and based on use cases, and I think we're closer than ever before of seeing that happen. And as Zoe Cruz has said, and I know that she used to work for Ripple, and she was a co-president to Morgan Stanley, Ripple is far away the winner here.
In terms of the cryptocurrencies, I would look more like the internet world. So let's say you decided back in 1997, all these cool companies were coming up, Internet Explorer and blah, blah, blah. How much can I afford to lose to a business plan? You had these people being given money on a business plan, not actually executing on just a business plan. And the right call was, again, within that profile, how much money, and within that, I would do the analysis the same way, which is looking at why is Google that just announced in 1997, they're going to get into that space. And I would look at, again, the industry risk. Within that industry risk, what are the people chomping at the bit at the Internet Explorer or whatever so for me right now is Ripple is the clear winner.
And there you have it. And I don't think you can say it any better, because I believe if you do use the analogy of the early days of the internet, you have to ask yourself, it wasn't the front runners in the beginning that really survived. It was the ones that were second, third generation, like Ripple, that really chose to take the long game, become interoperable, and make theirself really a commodity, if you will, about the understanding of how to integrate and use what they have, which is the protocol and their software, and play the long game and build the bridges to all of the traditional markets, so there can be a way for them to come to this new digital age. No doubt about it. Now let's take a look at this right here. This is Mr. Mr. Dark Defender talking about XRP, friends. He says we have 1 day left for the weekly close, and XRP is trying to stand above 36 cents, which we set as a limit. He says, I would like to share with you the current status in the 4 hour, which he shows right here. And you can see on this chart here, if we take a look, it should come into play here. Just 1 second. That's where we're at. 37 is a key resistance point. We can get above that. We can continue our march to the top. But I also ask everybody to pay very close attention to the conversation we just had moments ago. We need to pay attention to see if retail exchanges that are non-ODL partners continue to be replenished. That's what we want to pay attention to now that Jed McCaleb's stash is run out. We want to pay attention to see if there is an incentive, albeit through Ripple, which has said they have not offered XRP to a secondary market exchange that is a non-participating partner in ODL. So we know they're out. So if they start doing it, it'll be the first time since 2019 that they've started to do it. Jed McCaleb is out. So where will they get it from? And if they get it from a Ripple partner, what is the incentive of the Ripple partner to provide XRP to the retail exchanges at all? Begging the question, has the XRP turning point come? I'll catch all of you on the next one.